All right, so welcome to this lesson. Okay, welcome to this lesson. So, here is an introduction, an overview of everything crypto. Okay, so first we are going to start with knowing what crypto is all about, because this is a general introduction into the cryptocurrency space. Okay, so cryptocurrency is a digital currency. All right, cryptocurrency is a digital currency. Let's see. Okay, so they are digital currencies that work in form of money or assets. Okay, so just as you have your dollar, you have naira, you have this and that. That's how you have also cryptocurrencies. But the difference is that they are now digital. You cannot touch them. When something is digital, you can't touch it. Okay, so the same way you see your money is the same way other people see crypto, because cryptocurrency is even used as a legal tender. That's a real money in some countries, like country like El Salvador has approved Bitcoin to be a legal tender in their country. Okay, so cryptocurrency is money, and here are the three characteristics that made up cryptocurrency. Okay, because cryptocurrency is not only the digital currency out there. Recently, the Central Bank of Nigeria has built their own digital currency, okay, with the code e-naira. Okay, but that digital currency is not a cryptocurrency. Okay, not only in Nigeria, other countries like China also have their own digital currencies. Okay, but these digital currency are quite different from cryptocurrency for these three major reasons. Okay, first, they are electronical. Okay, these are the three um you know key characteristics of cryptocurrencies. They are electronical. That means they are digital. Okay. Secondly, they are inscribed. Okay. And thirdly, they work in the blockchain. All right. So this third part is what made them cryptocurrencies. Okay. So the encryption there makes it impossible for you know someone to assume total control of it. Okay, so that's why they tell you that cryptocurrency is decentralized. All right, so it's decentralized in the sense that it works in an anonymous form. Okay, so unlike the money, our naira, that central bank has authority over, and other countries um fiat currencies that their central bank has authority over, can issue it, can print it, and all that. But in cryptocurrency, there is no central authority that is governing it. Okay, so once you have gotten your own, you are entitled to whatever you want to do with it. Okay, so you can send it to someone else anywhere around the world. It's boundless, so you can send it to somewhere around the world. You don't need to complete any verification, to bring this paper or that paper in order to send Bitcoin outside. Okay, or to receive Bitcoin. You don't need any of those. The only thing you need is to have a platform. Let's say a decentralized wallet like Trust Wallet. We're going to talk about it later. Okay. Once you have it, you have Bitcoin in it. You can send to anywhere you want to send, or receive from anywhere you are receiving from. Okay. And the good thing is that nobody can track and say, okay, this is where this coin is coming from. It's coming from Mr. John or Mrs. Esther. Okay, no. So this is the encryption part of it. That's why it's called crypto. That's where the name is gotten from. So it was in cryptography. Okay, so this cryptography makes everything um secured. All right, so the next one is the blockchain. Okay, so the blockchain is a distributed ledger that approves and distributes transaction across different computer networks. Okay, so when a transaction is made, it's being published um in the blockchain, and it will be approved then the result will be distributed evenly for all the connected blocks to see. Okay, so that is why cryptocurrency is kind of secured, in the sense that you can't run a fake transaction with cryptocurrency. Okay, once what you're doing is not accurate, it won't go all the way through. Okay, so for example, if you want to send, okay, there's something called embezzlement. You must have heard about it. Let's say, for example, someone wants to send you money, okay, and he goes to the bank, and he collides with the bank attendant, and maybe he wants to send you 100,000. Then he will write he will write the teller of 100 naira or 1,000 naira, and then when the teller gets approved, then he will write 0 behind the other 3 zeros. That will make it 100,000, and he send it to you, and you think he has paid 100,000 naira. Okay, people used to do this scam in the past, all right, and even till now, when where teller is accepted, people still do this scam. Okay, but in cryptocurrency you can't do something like this. Okay, because the transaction is being distributed in the blockchain. So if you want to send someone 50 bitcoin, for example, and you send 45, it won't go. Even if it go, it will show all the connected computers that what was sent was 45 bitcoin, not 50. Okay, so these are the three major characteristics of digital currency. One, they are characteristics of cryptocurrency. Okay, number one, they are digital. Number two, they are coded in the in cryptography, which makes it encrypted. Okay, and the third is that they work in the blockchain. Okay, so you know this now. Let's move over to the next thing. How many cryptocurrencies are there in existence? Okay, so there are many cryptocurrencies in existence, thousands of them. All right, so cryptocurrency started first in 2009, with Bitcoin being the first cryptocurrency ever. It was founded by an unknown man who is fondly or usually called Satoshi Nakamoto. Okay, up to this time, nobody knows who this man is, whether he is alive or he is dead. Okay, so there is a history book of cryptocurrency. So you can get that book. It's for free if you have taken this course. Once you pay for this course, you have that book for free. So you can read it up and learn the history of cryptocurrency, and probably also know why Satoshi Nakamoto is still unknown up to today. Okay, so there are many cryptocurrencies out there, thousands of them. Okay, so it's left for you as an investor or a trader to know which one to go for. Okay, because not all the cryptocurrencies out there are legit cryptocurrencies. Okay, so that's why you need to have the proper knowledge so you can be able to sieve out the good ones from the bad ones. All right, so how do people make money in this cryptocurrency? Okay, how do people actually make their money in crypto? Okay, so just like every other financial market, um the the two major ways of making money is investing and trading an asset. Okay, so these are the two basic ways to make money from cryptocurrency, although there are many other ways to make money, which is also available in a book that is available for you once I've taken this course. Okay, so there are many other ways to make money from crypto, but investing and trading in crypto are the two major and basic ways of making money from cryptocurrency. Okay, so just like every other market out there, the principle is the same. You buy at a low price and you sell back at a higher price. Okay, so this is the basic principle of trading and investment. Okay, so you get an asset when it's pretty much low, and you sell it at a, when the value has gone up, so you make profit. All right, so this is basically how to make money from cryptocurrency. You make money from buying an asset and keep it as an investment, or trading it as a currency. Okay, so whichever either way you want to go for, the rule is the same. You have to buy low and you sell high. So what are the types of investments? Okay, so since we have seen that investment is one of the basic ways to make money in cryptocurrency, so now let's see um types of investment out there. So there are basically two types of investments: long term investment and short term investments. Okay, so short term investments refers to as, is a system of buying an asset at a low price and then wait for a short period of time, let's say some months, and you sell it off and make profit. Whereby long-term investment is the opposite of it. You buy an asset and then you wait for a long time, for let's say a year, 2 years, 3 years, 4 years, 5 years, even 10 years before you sell the asset. Okay, even some people consider 1 year as short term. Okay, they begin to count long term as from 3 years, 4, 5, 10 years. Okay, so the short term investment is just all about buying a coin and keeping it for the meantime, and waiting for the price of the coin to appreciate within a short period of time, a month, 2 months, 3 months, 6 months or so, and then you sell and make profits. Why long term investment is just buying and letting the value of the coin or asset appreciate very much before you begin to think of selling it. Okay, so that's it. So what are the types of trading that we have? Okay, so we have seen the types of investment. Now let's see the types of trading. Okay, so trading is a complex stuff. Okay, so that's why you need to have the right knowledge before you go into it. It's a very complex thing. Okay, so but we have at least four major methods of trading. First is the spot, then the features the arbitrage and the OTC, which is over the counter. Okay, so don't worry, we are going to look more into this both in the theoretical and the practical aspect of it in the comment sections of this course. Okay, but for the records, spot trading refers to a method of buying and selling coin um in the spot market. Okay, so this is where crypto beats forex trading, because in forex trading there is no spot market. You only trade with leverage. Okay, so the next one is leverage trading or futures trading. Okay, so this one is where you trade with leverage. In this kind of trading, you leverage the money the exchange will provide you. Let's say you borrow money from an exchange to add to the one you have, and you make a trade. So when by doing so, you are increasing your capital. Okay, and therefore increasing the the profits that you will make, the percentage of the profit that you will make. Okay, so for example, if you just have a capital of 50,000 and you're going to make 10%, so that is just 5,000. Okay, so let's say that you borrow another 50,000 from the exchange, making your money now 100,000, and you make 10% profit. That means you have 10,000. So when you make the profit, you now give the exchange back the money they borrowed you, and you take both your own and your profits. Okay, so that's for futures. So the next one is the arbitrage. So arbitrage just refers to a method of buying coin from a particular exchange or site, and then you sell it in another site or an exchange, and make profit with the difference in price across these two exchanges. because in the financial markets, two exchanges sometimes don't have um, the same rates. Okay, so there can be a slight difference in the rates. So you leverage this opportunity to make money by buying low from one exchange and then selling it off in another exchange. Okay, so the other one is OTC, over the counter. Okay, so over the counter trade means selling coins outside of an exchange. Okay, selling coins outside of an exchange is also called peer-to-peer peer-to-peer trading. Okay, so there are also three types of trading. What we just saw are the four major methods of trading. So now are the three types of trading. We have the day trading, the scalp trading, and the swing trading. Okay, so day trading refers to a system of opening and and closing a position on the same day. Okay, you can open one or two positions and you close them on the same day and make your profit. Okay, while scalping refers to a method of opening multi positions in a day. Okay, so in scalping you take advantage of the little frustration in the price, in the movement of the market. Okay, so unlike in the day trading that you just have to take advantage of one or two fluctuation in the market, but in scalping you like the name suggests, you scalp the market. Okay, so the short movements in the market is what you leverage to make your profits at the end of the day. So the other one is swing trading. Okay, so in this aspect is you buy a coin. Okay, you open a position and then you allow it to to stay for some time, a period of 4 to 2 weeks. Okay, sorry, I mean 4 days to 2 weeks. Okay, in swing trading you open a position and allow it to stay for some time before you can begin to think of selling it. Okay, so the difference here is that in doing the and scalping, you have to bring much of your time and dedicate much of your time to it. uh, Meanwhile in swing trading, in the other hand, you only need to analyze the market and then you go in, place your order, and then allow the market to get to your position before you can sell. Okay, so that is it. So let's talk about the risk factors. Okay, so everything that has advantage also have disadvantage. So these are the risk factors in crypto markets. Okay, so the first one is the market factor. So every financial market is subjected to to risk. That is the volatile nature of the market. So this risk can occur, can you know put you into loss when you didn't follow the rules, like when you buy high and you're selling low. Remember I told you that in order to make profit, the rule is to buy low and sell high. So when you leave this rule and they begin to do the opposite, you buy high and sell low, you will lose your fund. Okay, so the other one is the external factor. This can be as a result of you losing your password or making it open to people and they have access to your account, or buying a bad coin, or that gets rug pulled, or hackers coming in to hack an exchange or thereabouts. Okay, so we now go over to the next section of this course and see what we have. So this is all for the introduction, and I believe by now you must have understood what cryptocurrency is all about, how to go about it, and all of that. So we go over to the next section now.